again. Hey, all right, I think I'm live. Cool. Hi, everybody. Got some fun stuff to go over today. I'm going to go into a little bit of my analysis style. I'll work with SPY, and I'm going to tear into a bunch of different stuff. We got like 12 different equities to look at that were mentioned by old Jimbo over there at CNBC today. Bunch of upgrades, one downgrade, and some fun price targets to kind of look into. I'll listen, but I ain't hearing you. Yeah, there's a lot to go through, and I'm a very technical guy, but I take as much of an approach as possible that I can to explain things in the most simple to understand way possible. I've kind of always been able to, well, I've kind of had a knack for that in technical stuff through the years that I've been around in the work industry. Working on cars and stuff, being able to talk to customers was part of the job, and being able to explain very complex things to somebody in a way that they can understand. It's both a challenge and a very great way to develop a skill for myself. So I've come to find an easy time explaining things to people typically. Let's get right into it. So you can see I've got some really fun stuff on current candles today, and I'm going to explain that in a moment. But first, I want to go into identifying liquidity zones, as I come to call them, because it's pretty simple to see that anytime you see a wick on a candle, it is explaining that there's a failed breakout there. There were many limit orders that took place within that wick itself. That's why the candle didn't print a full body. And a lot of orders changed hands to literally change direction of the price. It's a failed breakout. So look left, and you see a bunch of them. Including a key pivot area, which I have explained on top of this big old control candle right here. When you see a big candle like this, mark the top and bottom because that price will be relevant later. And lo and behold, the bottom of this range goes to our go-no-go line, which is right here. And that was the middle of our second extension of a 1-for-1. So we had a 1-for-1 measured move out of this whole move, and it broke down into 4 parts. So you got a 1-for-1 here and a 1-for-1 here. Measured moves are easy to see. Just draw a box and stack them. Finding control zones is important because you know that price action tends to traverse them from A to B. So when they're in that range, if it breaks A or B, you get a breakout. You get price movement to the next liquidity zone. So this was our go-no-go zone because at this time we were looking at whether or not this consolidation was going to finish a 1-for-1 move or if it was going to break down and retest the mean, which was the middle of this diamond pattern here. So with respect to that, knowing where those zones are will really, really help sharpen your skills on being able to day trade effectively, particularly with SPY. Yes, this is a lot of lines, and as Creed would say, this has got more lines than a 70s coffee table. Yes, a mirrored coffee table at that. But yeah, there's a lot of lines here, and all of them have a lot of meaning once I drill into the time frames that I trade, which is oftentimes narrowed down to a 5-second chart. And I'm going to walk into that. So give me some time. We'll get there. Knowing where these control zones are, there's common 50% retracements, there's common pivots everywhere, and then knowing there's zones ahead too. There's a liquidity zone up here, for instance, from about 448 to 450 on SPY. There's another zone way up here, 450, 480-ish to 458. They can be ish zones. You don't have to be dead on. As I say, swag it. Pardon my French, but the explanation of swag is an acronym. It's a scientific wild ass guess. All right. So sometimes when you're charting, you kind of have to do that. You kind of have to use your mind's eye and take your best guess at what is expected price action. And oftentimes when I start saying ish words, where I'm finding that SPY usually used to trade in quarters, 50-cent pieces, and whole dollars. Now we're finding weird numbers like 94 or 88 or some weird number like that. Not always sticking to the quarters and 50-cent piece type of movements. So going into that, you kind of notice that there'll be some ish zones or swag zones, as I've come to call them. You'll find that sometimes a quick little guess is much more efficient at making very high-speed, efficient analysis compared to sitting there and crunching all the numbers and thinking about all the math involved. When you train your lizard brain to be able to autopilot and make really good educated guesses in your trading, oftentimes you'll be close enough to at least make a profitable trade, and that's the whole point. You spend less time thinking about it and more time doing it. To quote somebody who once said that, good successful traders will spend 80% of their time waiting and 20% of their time trading. That's kind of a trade-off when it comes to making things as simple as possible, and that's the mean to break the rule and then reestablish that same rule. While I'm going down and trading a 5-second chart, I apply the same thing. I'm spending 80% of that 5-second chart waiting for the move to set up, and then 20% of the time trading it. And sometimes I'm actually able to trade 50% of that time, or even 60% of that time, depending on volatility. So if I can take advantage of volatility, I'll put a skew to that rule because I can scalp that fast. Not everybody can, and I understand that. But I love being able to explain complex things to ordinary people. So let's dig in. Let me go down to a 5-minute chart here, and you'll see what I mean. So we have that established 1-for-1. That's this big box here. It's all shaded green. We've came up over it almost a full measure and then back into finding it as a support zone now. So this is going to be known as a common pivot right around 440.80. So knowing where that is and knowing where price action is, A to B would suggest we're likely to make a mean revision. But if you look at this accumulation, we've got a really nice 2-for-1 measured move out of yesterday's price action, which I missed because I was busy with some emergency family stuff. But now we're back to kind of the middle zone, and it meets right at that known pivot, and we're kind of cascading down into a descending wedge. Well, this is a make it or break it zone. Later on, I will establish that this range is probably going to be a go-no-go zone. Later on, I'll get to that. But in the meantime, we got some day trading opportunities. Knowing that today's a witching day, typically it's going to be a trend, not a trend day, but typically a range day. But not always. We got a trend. There is a trend here. It peaked up here, walked down here. Knowing where all of these fib speed resistance zones are is clutch for a day like today, and I've certainly put that to use this morning. So establishing very quick price targets, you can see that price tends to respect these lines, and all I had to do was find a common accumulation somewhere in the pre-market, establish a pivot, which was right here, and know where the price action is likely to go. We were able to trade this up if we wanted to. We were able to trade it down to each and every fib level. So this fib speed resistance fan becomes very useful. Applying that to known liquidity zones is even more useful. So it's combining two indicators. Pardon my sinuses. I've had some allergies going on this week, and it just keeps getting worse. So I'll do what I can. Looking at the rest of this, so we have a descending channel here. We're likely to hit the 50% revision, or mean revision if you call it that. We're kind of in that range. It can happen. But we're still flirting with disaster here, knowing that we've crossed this pivot once. We've gone down into it a couple deviations below. We're likely to range here for a while, and we're also likely to maybe see an A to B a little bit after 1 o'clock. And I have a different charting software that I use to find that, so I can kind of keep things separate. I can do different studies, but it makes it easier when I know where my drawing takes shape. Here's another diamond pattern. As you may know, I draw a lot of those when I see range expansion followed by contraction. I'll typically draw those out. We're currently trading outside the diamond, and we're currently trading in the bear trend. And I told all my viewers this morning, if we break this angular resistance, we're likely to go and perform an A to B. So this is another known liquidity zone, and this is on a slightly different time scale than what I did with my TradingView chart. So knowing where that zone is gives you a little bit of an advantage. You know there's a gap here. This is still that big box of that 1-to-1 from the bullish move, the massive bullish move that we saw in the day chart. And we're kind of trading between areas now. So if we remain bullish and we break out of this channel, price usually doesn't like to hang around on the output side of a diamond. It doesn't usually like to spend a lot of time in this range. So we could get a very quick scalp towards the middle or end of the day to return back to this previous high around 442. We attempted that breakout here, and it certainly made it to about half half is kind of an important thing to know in price action study. Half of every move tends to have a point where it can go higher for the other half of the move, or it can stop and reverse. So here we had a nice run from our regression line from the bear channel on the diamond pattern back up to almost the resistance, came back down, tested the bottom of the liquidity zone, perfect tweezer bottom. Many people were able to get long here and bring it right up to the angular resistance, and even if you wanted to stay long in that, you could have rode that right through there to these wicks right here into the middle of this zone. Well, now we're accumulated, we're kind of bouncing off that known 1-for-1 move down here, and it's drifted across it a bit. Definitely hit that regression line. We knew this line was here long before price was in here, and now we're just kind of flirting with breaking this channel and running for an A to B. There's a pretty good probability of finishing at A to B, or at least half of it. So you can set two targets here. About 441.90 would be a good area, and 442 for the end of the day if it extends up. That can certainly fail. You always got to apply the 60-40 rule. There's a 60% chance that it'll resume, 40% chance that it'll fail. Well, we're in the area of control, and we know that we're kind of looking like we could push that out. So we just wait for the break, and we trade the break. We never suggest trading the setup. This is the setup. And this little guy here, that's a diamond all by itself. So that's kind of what I do with my day trading, and I can also apply that to swing trading. That's why I go and do technical analysis on everything that CNBC says and put my own spin to it. And typically I can pick 2 or 3 really good setups out of that list and find some swing trade alerts, and I certainly do that. I'll start with revisiting one that worked out really well. This one was one that was talked about quite a bit on CNBC there, and I've been following it for a few weeks now, and made a very nice 1-for-1 setup. Here was the first 1-for-1. I had around this time been looking at this one, traded this 1-for-1, maintained or took my profit right around there, and then I watched this zone. And usually when you get accumulation, it kind of straddles that area. You expect that this can become a bigger measured move, and it certainly did. We got a full-on 1-for-1 out of this range here. Now we're flirting with a 2-for-1 and looking at this potential for accumulation just like it did here. We can kind of straddle this range here and eventually break the resistance, and if we do, we get a free price target. It's really easy to see. Just stack some boxes. So same thing I do with my day trading price analysis can be scaled into any time frame. That's what makes it valuable. So here we have an even bigger scenario. Look at all of this trend. Okay, this was clean 1-for-1 here. You got this whole range as 1-for-1 here. So that's been done before. It's kind of a commonality. When you see a setup equal and a continuing move, it's pretty likely. Well, 1-for-1 here, if you want to put it to that route, right there, it's plainly visible on the weekly chart. Look left. Let's see, it's done this before. It's kind of enjoyed this. Now if we consider this an entire trend on the weekly chart, we could say this could be bullish for that entire move. And let me see if there was a price target put on that. Yes, there was. So an institutional price target at 290 on this one. Let's draw that, and then I'm going to put some boxes on and see where we're looking. Kind of funny how it comes right to that 2-for-1. Just about $5 off. Let me narrow this down a little bit better. And if I'm within 5 cents, I'll swag it. Let's go with that. Where's purple? I like to run my institutional price targets in purple. Just stands out to me that way. This is on a list of 12 equities that are mentioned today. I'll jump to this one and we'll skip it when we go down the list. We're going to go down the list. So anyway, that kind of sets up. It holds true with our 2-to-1. It's pretty nice. If you want to go and say that maybe that we can do a little bit more than that, that's what the weekly chart's here for. You draw these boxes, take it kind of through the middle-ish of your accumulation, and it's certainly easy to see about where the middle is. Okay, and then you can draw a second box that overlaps this one and drag it on top, or you can kind of use your mind's eye, figure out about where that is, take your original box and drag it up here. Sure, we can shoot past that 290 and maybe even hit about 308. It's that simple, and it's a swag kind of thing, but it seems to work really well. I'm going to delete this for now, but that's just what I'm seeing that's possible on this particular equity. And looking left, we certainly got the evidence to say the market doesn't have to exactly repeat, but it does love to rhyme, and that's kind of what we're seeing here. So we can see that it can certainly push this equity in that zone. So that goes on to that one. Let's start picking off the list. New IPO was mentioned, and there's certainly some bullish sentiment on that, including a couple of commenters in the Scout Pit chat here. Particularly, as the aptly named restaurant would be. Gosh, let me get that down to a smaller chart here. Maybe 1 minute. 5 minute might do it. If I don't drag my screen all over the damn place. There we go. So only been open for a couple days. We've got the nice H pattern forming here. We can take a quick day trade on this. I know a lot of people are just saying, I don't care what it opens at, I'm just going to buy it and hold it forever. Fine, be an investor, that's cool. I like being a trader. So typical H pattern, watch for a double bottom reversal around here. Maybe we can come up and say grab about the mean revision there around 41.80. Seems reasonable. From a day trading standpoint, that's got pretty good potential to make that move. And H patterns are pretty simple. You find where it hits a low, you get a quick double bottom, maybe it'll tap that low again. As long as it holds there and continues a trend, we can find a setup for a break. And the break expected would be simply crossing above the previous high in this mix. So if we get the dead cat bounce to exceed this level after touching that low again, could certainly make a quick day trade out of it. I'm just going to swag these on here. I'm not even going to mess with setting them up to zero, whatever. I'd like to see this hit another double bottom, come through this resistance, and the trade would be above this resistance to previous levels. We've got areas you can mark out here. And if it breaks this, you can keep going all the way up to here. Just pay attention to what happened before, and you get a pretty easy time finding your price targets short term. And you can hold a swing on that. So certainly not investment advice, but I might take a entry around 36.90. I might take an entry above 38.72, but the higher probability of follow through would be when it breaks 38.72 and runs this way. So most day traders will be able to figure that out. Mean revisions are common. And then later on, if this thing continues to kind of trend in this range that it's established, there's your high, there's your low, we'll have plenty of day trading opportunities as time goes on. And eventually, you get either a bull trend or a bear trend out of it. I mean, this is a fairly new IPO. I'm sure there were lots of people who bought into this long before it went public. And what we usually see when it IPOs is how sometimes they get about a 10-to-1 return on their investment from buying it pre-IPO. Of course, if they're smart, they're going to take profit. And a lot of selling occurs when an IPO typically opens. Very rarely do they just open and continue gapping up forever. They always will pull back, and this is exactly what that is. A lot of people are very satisfied with their return. They may not be closing their entire return, but they may close a portion of it to take some profit and put it in the bank. They invested in a company, it was successful, now it's public, and pretty much free for vultures to pick it over, like us, day traders. We get accused of that all the time, but we're nothing. We don't move the market like that. Long story short, though, we take advantage of price action, and when we see there's some selling here, if you were apt enough to see it break support, you could have shorted this, but it's really risky. I wouldn't have shorted that. I'll wait for this thing to be optionable, then I'll start trading it, because I could see wheel trades all over the place on this thing. In the meantime, day trade it. Great price action to day trade. Moving forward, I love scalping IPOs. I do it all the time, but I missed this one because I didn't catch it yesterday. I was a little busy. Another thing with an equity I always kind of keep an eye on is Starbucks. They are pretty much bullish on this thing. They didn't set up a price target really, but let's see where we're at. Let me get out to the weekly chart. This is more of those 70s mirrored coffee table setups, but a lot of lines. This is my normal, when I started drawing these fan lines on a chart, this is essentially applying that to swing trading. And notice they converge at kind of a random place. They're just following trends, and where they are divergent from each other, I can find trading opportunities. Here we have a expanding range channel. I have more or less a support bounce off of here, an accumulation. Bullish 1-for-1's done. Now we're accumulating. That looks familiar. This could be leg one, that whole move, and then bounce off of this after accumulation and ends up here. About 130 would be a good target for me to put on it if it remains bullish. Anytime I have divergence in a rising channel like this, I always mark the center of it with a regression line, or about the mean revision line is essentially what you're looking at. And we bounced off that angular resistance. We bounced off the extended angular resistance, which is set up from another trend line back here. That is also the common trend line, I like to call it. That's this guy here. And certainly price respected that. I draw a line and I say respect my authority, and price just does it. This is how it works. Kidding. So anyway, we get the bounce back off of that, come back down to our regression line, and certainly we're looking a little bullish. And if we beat this mean revision of this 1-for-1 here, we could say, okay, stay long. And certainly I'm probably going to see that by about the middle of next week, since today is witching day, we'll probably see CNBC come out with a they'll look at other analysts and they'll pick a number for a analyst price target, and you'll see a purple line on here at some point. For now, the short term, we got a pretty good shot at hitting the mean revision here around 105.30. Trend looks good. Double bottom is confirmed right there on our regression line, and we've broken the first resistance. We've continued up to first price target. That's right here, this bar here. Certainly made a nice move to that this morning, and then pulled back down. There's liquidity. There's a little gap here. It's even filled the gap with the wick. Day traders are done with this. Look for a pullback, consolidation, and maybe we get a measured move to finish the mean revision here up to about that 105 target. So I think I can agree with some bullish sentiment on Starbucks. Looks pretty good to me. Let's move on to the next one. And it's funny because I keep talking to Matthew Tuttle there, and I'm like, dude, if you did a wheel trade ETF on everything Jim picks, you get the best of both. It's great to have a SGIM and LGIM because they kind of balance each other, and as long as people are trading them, you know, there's certainly money to be made there for the person who manages the ETF. But imagine what a wheel trade would do on that. Oh my gosh, the concept is insane, but it would be a very successful ETF. Let's look at Adobe. That was next on the list. They're bullish on that. Price target isn't really set yet. Let's go to the weekly. Certainly exceeded a mean revision here. If you look at this entire trend here, we came right to about previous resistance right in this area. In fact, I'm going to throw a pivot line on there. It's another tool that I use quite frequently. You'll see I have different analysis styles for different equities. This is why. This is just basic pivot trading for Adobe. It's a massive equity. It's got quite a big cap. You know, you can kind of look at it with just being able to trade the pivots is all you really need to do. But you can find some setups too. There is certainly, you can see the 1-for-1 here, but that's parabolic now. So I'd almost certainly expect this to pull back after hitting that almost 520 zone. And it'd be appropriately done if it did so, stayed in this range, and it gave us a clue as to whether it was going to revert this entire trend, or if it rejects about here and pulls back into accumulation for some bearish moves. I had this as a price target the last time I looked at this, and that was probably a week or two ago when it was on CNBC. I've been keeping kind of track of this stuff. I had a target here off this double bottom, and it certainly legged up to it. I got out of this position here. Certainly left a lot of money on the table, but it was as high as I wanted to take it. Effectively, earnings came out. They have some pretty good numbers, so it went parabolic right into earnings, and now there's profit taking right here, a known pivot zone. Very keen to pay attention to that. And on a daily chart, I bet I could establish that as a liquidity zone as well. Probably this wick here would tell the tale. With that, we can find a very quick demand zone, and if it holds that demand zone, we could probably find one more bull trade out of this thing. Otherwise, we were looking for this as being our go no go zone. If it breaks below this, we can expect revision back here to the mean revision line and some accumulation. So we might get a bear move out of that. Certainly the house is a bit bullish on it, so to speak. I might say this is going to be a red zone and tell us make it or break it on this move. And let's drill into the 2 hour here. We could continue to run a little bit through that if this is a nice 1-for-1, but we've looked left here and we got 1-for-1 done. This whole range, 1-for-1 on that is done right there at that line. I would wait for this to accumulate. I'm not going to take either side of this until I see some accumulation and possible continuation or rejection. So pretty simple. Keep the price action on that one on watch and just kind of trade it as it goes. Not necessarily one that I would wheel trade because the yield isn't to my expectations, but it's not beyond the realm of possible to generate some good income on that one. NVIDIA. Parabolic, a lot of people made great money on that. Here is our previous analyst target at 350. This one, they've upgraded the price target to 500. Let's drag that on up and see where that looks like. Oh my gosh. Let's see here. 530 pennies is close enough. Swag it. Okay, so we got our 1-for-1. That's pretty much done here. Can we extend that? Pretty good chance. Certainly got the strength in that trend. Let's see if the target kind of lines up for this revision here. Yeah, maybe even above it. Okay, good enough. I can agree to be bullish on this one. That's parabolic though. That is some incredible strength. And certainly it has gotten a massive boost from AI and all the other things going for it. Certainly could be a very good bull move. And let me see if I can extend a couple of these into areas that will make a little more sense with a channel swing. Turning this into our regression line or mean revision line. So if it continues to be bullish, we could certainly see it overshoot that analyst target of 500 and maybe even peak out around 510 or so. Certainly know that that is parabolic as all get at, man. Usually when things go up that fast, they've got to pull back. Some people were a little bit bearish on this pullback. I scalped a little move there, but if I was paying attention, I probably would have went long again on this position yesterday if I'd have been around. At any point, it's kind of running into a little bit of weakness here, so kind of expect maybe a move to about half of that, around 452.80 would be appropriate. I'd love to see that pull back there and come into 428 again to give us a chance to get long on it, but that is one heck of a strong trend. It is parabolic. Man, the market's going to have a hard time deciding if it wants to chase this or not. And certainly, I don't like chasing stuff because usually, whether you've experienced being bit by chasing something or not, you recognize it when you see it. When things are parabolic and just out of range like that, pay attention. Be careful. Be nimble. Certainly don't take any particular person's word for any advice on that. Just analyze it, use your gut, figure out your price action. You can certainly scalp the living tar out of it, but it's going to be expensive, so there'll be a lot of risk involved. For my taste, risk to reward ratio is everything, and if I can't find a good risk to reward ratio, I won't even mess with it. Just let it go. There's plenty of other trades out there. Moving on, AMD. This is another one that kind of gets out of hand, and it's certainly done what's expected with the pullback. Let me go into the daily chart here. So we've got the makings of a really nice measured move to finish all that. We've made a 1-for-1 here. We kind of blew away my $100 target and went even higher. We went and tagged the mean revision of this entire trend, which would put this as our mean revision line. Let me change that to white. And I'm going to stick the analyst target on here. They have a new target of 138 as expected price on that, and that seems appropriate. Let me get a line here. I already have a line that's close to there, so we can agree to agree. There we go. Let me stick that in a more precise area here. Sure, good enough. All right, so let me pull this back down. Looking at 138 would be about coming back into control areas here, and certainly every time you see a wick, as I said before, that is a known area of limit orders, and they take place in that area. So certainly expect that to be a supply zone right in that range, around 138. Can it extend there? Of course it can. It's parabolic as I'll get at, but it's certainly got some strength to it. Watch for accumulations. We've certainly got a nice pullback in this area, and I'd let this pattern follow through a few more days before I decide what to do with it, but that could be a good swing trade setup soon enough. Critical support probably be this range here. Let's see if I can throw a go no go zone on there. Yeah, within range of this wick here, so let's draw that real quick. I'll keep it brief. That can be kind of red. You can look for if it holds support in this area and continues to build into accumulation. We can expect a nice big, at least half measured move out of that. This is one leg, two leg, three legs into here. 2-for-1s are pretty pretty common. 3-for-1s are pretty rare, but a 3-for-1 would take it to about that 138 zone. So it can certainly set up, but just be a little cautious on this. Looking around the market, a lot of tech has been ripping faces off, and certainly, when things get that high that fast, they tend to come back down. So just be very nimble. Don't get burnt. Look for rotation rather if you want to swing trade is always the best advice. Move on to iRobot, IRBT. This one's always been controversial. Massive gap up. The Amazon news that came out, of course, they've done this before. I think I remember a while back Amazon mentioned something about this and it took off, and that was probably this range here. Insanity kind of catches on quick in the market of retail, I'll tell you that much. And this is one hell of a, I chased it too high, and I bet there's just so many bag holders in that. Oh, I wouldn't want to get caught up in that, but I know where the supply zone is, and I think it's going to be right in these wicks here. Kind of pay attention to that, and it happens to be right around where the weekly 200 period is, so it will be an effective area of interest later. Let's go to the daily chart on this. Kind of look left here. We've got short-term supply zone right up here, around $52, $53. This is quite the gap up. It exceeded a 1-for-1. I'd love to see accumulation here before continuation, and certainly take note of this just massive, very quick move here. Looking at the other possibility of whether or not this becomes 2-for-1, we can simply just copy the box a couple times. Drag one down here. Look at that. It kind of lays right up. We've been here before. And we'll draw a third one. So if it gives us a 2-for-1, it gives us a great target right on top. Extension target, look for possible push to 57.80. It's very possible. Just know that there's definitely going to be some turmoil with this one. And when something gaps up like that, I don't care what the news is, it's usually going to get taken advantage of as far as profit taking. If they got long down here, you can expect them to absolutely take profit on a move like that. That's massive. So certainly be cautious with that one. It's one of those companies where they make a fine product. It's very popular typically, and then when they get a takeover or something like this in the news, of course it's going to pop. At some point, there'll be an agreed upon price or negotiations for if they're going to be bought out by Amazon. I don't know exactly what the news was. I thought it was a buyout. Who knows? There's always going to be a price on there, and I haven't even read the article yet. So technical analysis says it can go higher, but in the meantime, it's already made a very explosive move. So definitely be nimble with that one. That was Amazon taking that over. I can pretty much skip Amazon, but I'll give it as an example anyway. Amazon was easy. Probably one of the easiest measured move trades ever. Broke this channel. We still have a possible target of 136. That's the mean revision of this entire trend. I marked out some key liquidity zones within that if it breaks it. And certainly know this is also a liquidity zone between 134 and 136. So I'll certainly mark that on the weekly chart. But for now, we made a very nice 2-for-1 measured move. We got the leg here, it exceeded it, it actually hit the target once, backed down, accumulated on the regression line, and bounced out of the angular resistance on that channel. There was a nicer move from here to here. But knowing what happened before, I was able to stack the legs and figure out exactly where the target was. And look, dude, exceeded it a tiny bit, but it met that target very, very well. It's done it 2 days in a row now, or not in a row, but successively. We've gotten there twice, 3 times. It's a rising wedge. Can it pull back here? Yes, it certainly can. We can see it possibly come back to like 120.50. I'd love to see that, in fact, because then I'd be okay with going long to the 136 ultimate target. But in the meantime, the way things are looking in the economy, where things are kind of out of control in some ways, certainly be nimble and either A, take advantage of a pullback, or B, if it gives you the signal to wheel trade it, heck, I would. I've been there before. It's an awesome stock to trade. I love Amazon. But just be, very nimble with your price action as far as understanding what is both behind us and possibly ahead of us. So can we get a 3-for-1? Yes, we certainly can. It does take us above that 136, but it takes us to a supply zone, and it's definitely going to be a supply zone up there. So kind of wait and see. Give it till about the middle of next week to give us a clue as to whether it's going to hold support or not. And if it holds the area of accumulation that it's currently in here, and it gives us a nice sign of breaking out of that third box, we can expect it to fill the range all the way up to the demand zone or supply zone. And if not, we know what to do with it as well. So pretty simple one. Meta. My gosh, they extended the price target to 320 on this thing. Let's go to a weekly. Certainly an example here. There's a nice 2-for-1 in play. 312 is about my target for that. Certainly lots of supply right there. Be aware of that. Let me mark this price target before I get in too deep here. Let's find what the analysts are saying on that 320, huh? We'll just see about that, shall we? Yeah, get close enough. There we go. I'll fine-tune these later if I have time. That's the thing. Like I like to make analysis as clean, quick, and simple as possible. And sometimes just getting close, good enough. If I got to sit here and play with all of these stocks I'm looking at and get to the penny on all my targets, man, my time would be spent doing that instead of scalping stuff like I love doing. So let's go with that. Looking at the possibility of hitting that, sure, we can have the extension outside of that. We've certainly seen these 2-for-1s do that. They'll give a little overreach, shoot over the target. That's why we call it a swag. We're just taking a scientific wild-ass guess that if it did this and it did this, it can do this. Okay, so it's right in that range. Since we're on the daily chart, let's figure out where our next supply zone would be, and certainly it's right in that target. There's your candle for it right there. The wick would put right in that range for a supply zone. But also note this, it is a gap. That is a massive gap, right? So we're above the 248 target. If we get through this accumulation here on the 1-for-1, we did that, no problem. That was an easy target. And then the third block here, the 2-for-1, yeah, that fills the gap. So gaps love to fill on the daily chart. and it puts us in range of right to top of the box. My target would be 312.30. I can certainly say that it's definitely got the clout to push higher, and knowing that also we're in on this weekly candle, that's just one big control area. We can certainly look at 301.50 as a take caution and be ready to take profit zone. And then if it continues to walk through the entire price range, sure, we could take advantage of that. If you catch it just right, today you might be able to lock in a condor on this, is what I would be playing on that. Because if it pulls back after it touches this zone, we could certainly have something in place to secure it, at least down to 248, for relatively cheap. And then you could probably find some 320 spreads that would be appropriate for just out of the expected target zone. I'll have to look into that. I'll have to see what the risk to reward ratio is on it. I don't currently have a position on Amazon, but I might consider throwing a condor at it until we can figure out this consolidation and carry on. Let's see what else is on the list here. Meta. We talked about Meta already, didn't we? Yeah. No, we're in Meta. Sorry. Got confused. Thought I was talking about Amazon still. So Meta, yes, we can certainly do that. I don't have a position in Meta either. Pan West was one I do have a position in, though, and that was mentioned. And I think I showed you that a minute ago. Oops, P-A-N-W, sorry. Fine example of what to expect on Meta. Same situation, just this one's parabolic and outside of resistance. So we don't have any known supply zones here. We just got to go with our gut and figure out where the target is. Moving on. Let's see here. Caterpillar. Not one that I regularly trade, but I perhaps should have. This is a pretty easy setup. We got our regression line here, bounced off, made it through the accumulation zone, came back, tested it. Now we're back bullish again. Can we sit to the target? Currently, we've had institutional target of 275 here, and they've reduced that to 238. Kind of interesting. Let me pull that back. Oops, I had it. Oh. There. Well, that beats a 50% retracement of this guy here. We've certainly got room to accumulate here for a continuation up here to 274. So that's kind of a downgrade by analysts here. And knowing that I like to look at downgrades as an opportunity for them to buy into the liquidity produced by it, we could certainly go higher with this one. I don't normally trade Caterpillar, but it's pretty obvious this is a nice parabolic run. We've got a very clean 2-for-1 already done. Let's see if it accumulates in here and gives us a signal to go higher. Every time I've seen a reduction so far, it's like usually been kind of easy to go long on it and win, but let's see what happens when price gets to the top of the area around 250, 270 and see if it gives us one more leg up. Otherwise, it could certainly break over and pull back to that endless target. I mean, they're pretty good at finding these things for based on fundamental analysis typically. And that's about kind of a revision zone. So sure, definitely going to set up for a trade sooner or later, but in the meantime, watch this accumulation in this area. We can see it either pulling back to this target or continuing on. I always take, anytime they downgrade something, I always take that with a grain of salt. I always know that typically there's going to be some liquidity, and long-term investors, institutions will be buying into that, of course. Old advice is like, buy when they're afraid and sell when they're greedy. It kind of plays out in the chart all the time. So just certainly be keeping that in mind if you're an investor in CAT. A couple more to go. We got LEN is one that was mentioned. Another one I'm not trading, but maybe I'll take interest in it sooner or later. Analyst targets 150 on that. that purple. There we go. That is insane. But we've done insane before. Let's take some measured move approach to this. Again, I love measured moves, man. They're just easy to see. So this gives you a range box here. It certainly met that target. Eventually it pulled back to the mean. We can take this same range and stack a third box and kind of drag it over the common pivot point. That puts us into that target, but certainly be careful there. This is already pretty parabolic, a nice little double bottom off the 200 period. Broke resistance, you got leg here, that's been met. A 2-for-1 would be more appropriate off of this price action here. We can go ahead and see that real quick, so reduce that a little bit. Take this, stick it here. I love drawing, guys. Thanks for bearing with me. That's more reasonable. Let's give it a target of about 133 if it's going to remain bullish in this trend, and that's certainly appropriate. $133.30. I'll call that. Let's see if that makes a good call out. I might even throw that in the swing trade alerts. Go to the daily chart. Let's have a look at current liquidity in this, and we can see there's plainly a nice little 1-for-1 done here, and that wicked off pretty big before it got there. So watch for accumulation around the halfway point. We could have another extension out of this, so we could certainly put this in the watch list. Don't take a trade until you see the setup break. And there's 1, 2, 3. Hell, we'll just draw that with a channel line. Different analysis styles sometimes play out pretty well. I draw channels all over the place. This is where my charts get so nasty, guys. I get to draw a ton of lines on them. They start looking like that coffee table from the 70s we always talk about. There's regression here. I'd love to see this pull back before continuation, but definitely keep this on the radar. I'm liking this. This is a good strong trend. We have a good clean 1-for-1. We got a good price target. Let's see what it does with this. So let's watch for a pullback to about 119, 120. I'd love to see that. And maybe it'll give us a clue as to whether it'll continue running that or not. Certainly short term, looking for a pullback. Pretty obvious there on a 2-hour chart. You got a big tweezer forming here. That candle just about completed there. And we can certainly see a revision down around 118, 120. I'd love to see that. That'd be great. Cool. I'll definitely keep my eyes on this one. I'm not going to throw it in the alert just yet, but I will later on. That's going to be one that I'm going to wait for the setup to complete before I go and start making decisions on this thing. But so far, it looks promising. Last but not least, SoFi. They gave it a big fatty downgrade. Didn't give a price target on it, but they were saying that things weren't looking so good. Let's have a look. I know some people who are trapped in this thing from way back, and I've been trying to help them out. They went and bought it up here, dude. No, that is not good. So now we're trading kind of at a very low level. Weekly, we got this big wick sticking out of it. Let's start drawing a couple of interest zones on the daily chart, and we'll get some figuring on this guy. And like I said, they didn't give it a target, but they're bearish on it, and certainly they said so, so down she goes. Let's go and look at what we have to work with here. So we've got known liquidity right up here. In fact, if we wanted to take it to the top of this wick instead, we certainly could, but we don't need to worry about that. That's our way out range. Now let's draw a couple more zones here. So we've got this previous high here, trades into this area sooner, so let's go with that. make that our go, no go zone. And if it holds there, we can certainly see some measured move stuff start to happen. So let's go and dig into that real quick. This is why my charts get to look as dirty as they do. But they work. They work for me. That's all that matters. I like to say that they could work for you too. Can we get a third move out of that? Maybe. I'd like to see it accumulate and hold that go, no go zone first. That's going to be a huge supply zone or demand zone. If we see the demand take over here and we start to see a nice big clean daily wick in that area, cool. We could be back at least to this target here. We know this zone's here where there's going to be some sellers. Certainly they were present before. And if we exceed that zone, we know we can finish a 2-for-1 measured move. Let's look a little further left. We got this block here, went to our go, no go. We pretty much repeated that. Now let's dig into it a little better. We've got this guy here, and revision on that would take us just under that, about $9.55. So we could see a nice little dollar move today. Maybe, well, 70-cent move to about that that target up there. But be a little cautious with stuff like this. This is still considered a penny stock. I love the options liquidity in this one. It's certainly good for at least a 8% natural monthly yield on this thing. It's a pretty good wheel trader, but it's volatile enough to where you kind of wonder if it's going to hold its value for long enough to be entirely fruitful over time to be able to keep your price or your cost basis under a bear trend or under a revision. And then certainly if it breaks this, you would find yourself getting the heck out of that trade for a small loss before you knew it. So definitely a risky stock to trade, definitely a risky stock to invest in, and certainly can produce some options income over time with it, but it's probably not the best time to jump into it until we see that pullback happen and figure out if it's going to resume. Another thing to pay attention to, this is one big nasty downward trend, and let's see if we can split about with a swag estimate here of where that revision line is for reversion line is, mean reversion, about a 50% retracement. It's almost a zone because you can see that this was a support area right in here, and then this was an accumulation before it broke over and made a full bearish measured move. So I'd actually like to kind of extend that. Let's give it a revision target of about 1390. If this continues to break out of this big old rounding bottom, and it's certainly broken resistance in that area, if it continues to accumulate here and finish the move, we could certainly see that become a bullish trend out of this. This is kind of the market structure in a nutshell. We got, like, you know, the peak, everything kind of breaks over, and then you've got capitalization, and everybody kind of starts shorting it, and then all of a sudden we find the bottom, we find a fair value, so to speak, and then we start to revert that. This looks more like a short squeeze off of that information, and it's likely to pull back and find support before continuing. So probably in a couple weeks from now, we could probably see a good setup for whether or not this is going to continue to be bullish or not. But day traders will be scalping the crap out of this, for one, because it's got attention, it's got plenty of liquidity. You can certainly get in and out of your positions with efficiency, and the price action for day trading is pretty nice. But if you're a long-term buyer in this thing, I certainly would wait for a sign to get in with a fair value, and of course take that further. As far as this whole measured move setup goes, though, this is pulling back. It's very likely to find support around that, you know, $8.20 area. I would say if it can hold that, sure, yeah, we can definitely see a good long setup on that. But just be careful. This is definitely penny stock. Anything can happen in it. It can certainly do some stuff. So yeah, that's a lot of dope about a lot of different stocks. And one other one I want to revisit. Let me go in and have a look. Let me see here. There was one I put in the watch list that did pretty much set up. I can't remember the ticker though. I just got to get the ticker. Give me a second here. There's actually two of them. So there's STEM and MTB. That's the one. This one's certainly showing me some interest. It's got the nice 2-for-1 measured move setup. I'm kind of revisiting this because this popped up last week. We've got the low range of the mean revision from this whole trend right here. I've got a target of about 144.60 on that for a 2-for-1 measured move, and that's only if it breaks out of this descending channel. It's got to break this resistance, otherwise it just stays in the channel and probably hits the regression line, which would kind of meet right back in the leg 1 move. There is a good possibility that this move here ends up being that it retraces the bottom of that, and it certainly did. It made a mean revision of this leg. Now it kind of bounced here. Last week we saw it kind of bounce off the zone, and we figure maybe it's got a chance of holding accumulation here to break that angular. So certainly keep it on the radar. Again, don't just jump into it. Don't trade the setup, trade the break, and watch for this thing to become bullish later on. It's not quite ready yet, but all in all, it's starting to become a decent setup. And then let me go into the other one here, and that was well, I've got a couple to go through, and real quick because I only have a couple minutes here. STEM was one I was looking at for another penny stock that's kind of interesting. Definitely broke that angular resistance. It's starting to build some momentum out of this. It's certainly covered a gap on the daily chart. Now we're kind of at support for the base of that gap here. You can see it plain as day right there. Look for this to continue and possibly set up as this becomes a leg for a 1-for-1. It kind of puts us just in range of the next supply zone, which would be right around here. I'll draw that real quick and then I'll kick out of the way because I think Creed's coming up next. And let me throw this together. This would be a good bull target for me around 750 to 780, and I want to see what happens with this daily setup first and then drill down into the 2-hour chart. You kind of got a good chance of retracing this area around 560, but right now it's holding support for mean revision of this guy, and it found support around 585, 587 this morning and went halfway back up the control bar almost. So definitely look for this thing to start accumulating some momentum here and possibly continuing that bull trend. But if it fails here, like I said, it's a penny stock. Be a little nimble with it, but certainly keep it on your radar if you want to trade it. It's got a nice setup that's kind of forming, so you know it can certainly fail. But for now, it's out of the channel and it's kind of accumulated to look like it's going to continue to be bullish. So certainly keep it on your radar. Well, thanks for joining me, guys. Thanks for sitting through about an hour of analyzing a whole bunch of stocks, going over a couple of the trade secrets that I went through with this with the beginning of this broadcast, showing some of my price action analysis skills at their finest, and applying them to pretty much any time frame is my goal. I love to be able to spot price action on shorter term time frames because I love teaching people, and certainly repetition is your best teacher. Experience is your best teacher. So the more price action you can experience on a short term chart, the more you'll understand how it works on a long term chart and be able to take advantage of that. So you can certainly take everything you learn on a 5-second chart and apply it to weekly charts for that matter. It all works out. Anyway, with that, I'm going to see you guys next week. Have a wonderful weekend. Have a wonderful Father's Day for you fathers out there, and I know I certainly will. And of course, remember, Monday the markets close. We have Juneteenth coming into focus here. It is a kind of a newish holiday, and certainly the markets will be closed on Monday. I want to take that day to probably produce a couple strategy videos, so I'll see if I can make that time useful for me. I'll see you guys then. Have a wonderful time.